Tesla stock has been an absolute roller coaster over the last 6 months or so. We can see we were almost exactly the same price. We're up about 5% in 6 months, but in that time frame, we ran all the way up to near 500. Share price, we were at 488 is where we peaked at, and now we're back down to 240. If we zoom out, it gives us a little bit more context. We're still up 42% of the year, although that was a pretty low low. And over the last 5 years, we're still up 560%. This is a company that, despite everything, has grown and has grown rather fast, but it's also a company that trades a lot off of momentum. When people get in on it, they get in on it. I mean, we peaked at 400 back in 2021. That was pretty wild. Like I said, we just ran up almost 100% and then back down again in 3 months and then 3 months following that. So Tesla stock, where am I sitting on it? What do I think about it? Where are we sitting at financially? Let's dive into it real quick. We have already established in this video, Tesla is a stock that trades a lot off of momentum, but if we're going to invest in this company long term, where are we actually sitting with it? Is it crazy expensive? Is it maybe cheap? Let's take a little peek. So if we go down here to the income statement, we can see. So back in 2020, their their revenue was 31 billion. We are now sitting here today at 2024 at 97 billion. That is a dramatic increase. Even if we assume, we're not going to look that far back today, but it's a crazy increase. Let's just assume that, okay, this was a terrible year, right? And we just bounced back into 2021. We aren't actually growing this fast. It's just a down year. Even from that standpoint, we're nearly doubling in a 4-year time frame. Doubling revenue in a 4-year time frame is very, very, very good. It just is. Now, income has been even more extreme. If we're going from 2020 at least, 1 billion to 7 billion in income. But like I said, if we're going from 2021, okay, we actually really didn't even increase operating income that much. But when you see such a dramatic increase in revenue, it's not that surprising that it's going to have some drops in earnings per share, some drops in profit. That's fairly normal because, like I said, you're increasing revenue very, very rapidly. Now, that doesn't necessarily mean that you are still cheap, but it does give you an idea of, okay, this isn't something that's crazy expensive. The earnings tab disappeared on me, which I normally like to look at. You can see that here. So revenue, even after the crazy increase from 2020 to 2021 and then 2022, we're still increasing revenue at a decent pace. You grew 18.8% in that year. And you grew 1%, but if you say, okay, that's a wash, 20% in 2 years together, that's still pretty good. That's what an average company do, and you grew 12.8. So even after that crazy increase, you're still growing revenue at a pretty solid pace, and you are. The earnings per share doesn't look quite as good, but we're expecting growth next year. And like I said, when you have such a rapid increase, it's really not too surprising when we look at that. It's not quite as extreme on the the GAAP. So you do have a decent increase looking at GAAP. So this is what's calculating the PE. I was blanking on that for a second. PE is calculated from this. It's actually a bit higher than it looks. You might think, 2 to 2.4, that's not that crazy. But that's actually fairly significant. That's somewhat in the range of a 20% more than what we actually are. So all that factored in. If we factor in, and we're still not getting the earnings thing here, but if we factor in the growth, right, you're doubling revenue in a 4-year time frame, maybe even tripling revenue in a 5-year time frame. That is very, very impressive. Yes, the earnings per share isn't quite as good. So with Tesla, now let's dive into what they actually do. You all know Tesla is a car company. They're one of the largest in the world. They're the most successful. They've managed to grow and be very successful in an industry that is very, very competitive and very difficult. That's the main drawback, in my opinion, to Tesla. Is I don't like the automotive industry. I don't like it investing wise because there's a bunch of competition and it's hard to make money. Tesla, despite everything, has been very, very, very successful in this space. It is that shouldn't even just to get where they are. It is incredibly impressive. It really is. Now, if we're looking forward, even at the range of around 240, if you don't have fairly rapid growth that which we see in other Mag 7 like companies, you are still a bit expensive right now. But two things. Well, actually a couple things. One, their development and their technological edge that they're doing with self-driving and the robo-taxi and all that sort of thing, that is one thing you can bank on. There's still a lot of growth there if they can pull it off. I'm not saying they do, but if they pull it off, you're going to be fine. You're still going to continue to grow. Also, two, separately, right? Another point is that this is a stock that trades off momentum. You're going to be down and out on it, and you're going to be high. That's just the reality of it. So if we aren't buying at the peaks, there is a very good chance that we have another peak eventually. Now, maybe it's not a while. If you bought here, right, 2021 at the peak, you still would have been up, but you wouldn't have been up for very long. So, but if we're buying in, certainly in this, let's say, I don't know. I mean, it's not going to drop below 150 again unless things get really bad, like we go into recession. But if you're in that high 180s to low 200s, and you like Tesla a lot, this is a good entry point. It is. Like I said, it's still expensive in the sense that, okay, you're still paying a fairly high PE premium, but this is a company that is growing rapidly. And like I said, one of the most successful, it's still one of the largest companies in the entire world in a space where Ford shares haven't increased for 40 years. It's just a very difficult industry to compete in. All this to say, I'm sure it's a little bit scary for those who are investing in Tesla, seeing it run up and run down, and it's a bunch of whiplash. However, if you do own Tesla, you're holding it for the long term. You are holding this stock because of the vision of robotaxi and where it can take you. That's one of the main reasons, and nothing's changed. Nothing's changed over the last month. Nothing changed when it was at 200 beforehand. Nothing changed when it was at 480, and nothing's changed now. This is still a company that can hit a home run, continue to do well, and honestly transform the way cars and the automotive industry works. They still can do that. So if that's why you're holding it. Also, if you, I don't know, this is pretty decent stock to trade. I don't do much trading on this channel. It's a pretty decent stock to trade. But also, if you really, really like Tesla, you're going to be in this range in a decent entry point. I think there's a pretty solid chance it goes lower. You might be able to get it near 200. But that's just me. I am rather conservative. I don't own a lot of these high, crazy growth stocks. I like growth stocks. I like the TSMs. I like some NVIDIA, that sort of thing. But I generally don't go on the crazy high PE stocks for me. So at this range, it's definitely not bad, but it's not like, ooh, I'm jumping out. If we're getting that 150, 160, 170 range, I'm really excited. I'm starting to, okay, this is a stock I can buy into. So anyways, that's all I got for you guys. If you enjoyed, like and subscribe. I do daily stock content on this channel. I'll catch you next time.